All right. Let's get into the content. Let's see what's going on in this world because it seems like there's some stuff going on in this world, man. I hope everybody's having a great day, a productive day. I know we have. I just got off of a few calls today. One of them with my mentorship group. We were going over stocks and investing and stuff. And so I figured, I'm kind of on the same topic. Might as well stick to it. But first, I got to catch up on what's going on in the world. And so apparently, jobs report came out, and the expectations shocked everybody. I really like Clearview Tax. Shout out to him. So I'm gonna listen to how he reports it. I think he's very unbiased, and I think he's got a little jab at Trump in this thing too. It looks like because at the very end of the title says Trump takes credit. Why?
Jobs
Why?
reports which beat.
Seems like he's being a little petty.
In today's video, we're covering the jobs reports which beat expectations. So as soon as the results came out, President Trump and his cabinets were taking credit for it. And I'm going to explain to you why I'm bringing this up later in the video. So the Trump administration says that there's a jobs boom, that more Americans are working and for higher pay. So Press Secretary Leavitt says that this is the second month in a row where the jobs report beat expectations. So for the month of April, the US labor market added 177,000 jobs, and this beat analyst expectations of 133,000. And before I give you more details about the report, I want to show you Trump's team saying that the golden age has arrived. So please take a look.
It's nice to be here finally, and it's a great day for these jobs numbers, aren't they?
Yeah, much stronger than expected jobs report this morning, even as we've been hearing sort of a wait and see approach from employers. What was your takeaway?
Well, we blew it out of the water last month, so this does not surprise me. This is exactly what I knew the president was going to do, but 40,000 more jobs, again, exceeded expectations. So this is not a wait and see anymore. The golden age is here. This is what we're experiencing. This is what the president wanted when he put this team together, and we're working hard to deliver for the American people.
Okay, now let me give you more details about the reports. Month of April, 177,000 jobs added. So as you can see from the charts, the labor market has been weakening over the past few years. So that's why it took a lot of analysts by surprise how it held up so well at 177K. So the unemployment rates remain unchanged at 4.2%. And here you can see that wage growth came in at 3.8%. But honestly, this is just my opinion that this is nothing to get excited about because we need this figure, wage growth, to be much higher than inflation, especially to make up for all the damage that's been done in prior years. Okay, so listen, keep this figure in mind, 3.8% wage growth. So here's a chart of inflation. So depending on which one that you want to use or look at, PC inflation or core PC inflation, or if you want to use the averages. So inflation is still in the 2 to 3% range. And again, we need wage growth to outpace inflation by a wider margin and for a long period of time. Okay, so going back to wage growth. So it's nice to see that the rate of inflation has been declining. However, wage growth has been declining as well. And here, I want to show you the categories. They added the most jobs for the April jobs report. So number 1 was private education and health services. Number 2, transportation and warehousing. Number 3, leisure and hospitality. So this is followed by professional and business services, financial activities, construction, and then you're going to see that for governments added jobs. But you have to remember that this is all governmental jobs. So I want to show you the stats for federal government jobs and the effects of DOGE. So in April, the federal government saw a net loss of 9,000 jobs. Now, 9,000 jobs, so relatively speaking, I'll tell you that this is not a huge number, considering that there are approximately 3 million civilian employees at the federal government.
Yep.
Okay, so this brings the 3-month...
And this is all data we've been looking at for the past few weeks. We know this. We know a lot of these jobs were, this is inflated by government jobs, and they were cutting jobs. And I remember, Marco Rubio, Elon Musk getting into it because he felt the government wasn't cutting enough jobs fast enough. So this isn't a secret here.
Decline to 29,000 in total, which is just under 1% of federal employees. However, I just want you to be aware that these figures, they don't reflect the true amount of federal layoffs. So the reason why I'm saying that is because if a worker is receiving severance or paid leave, they're going to continue to show up as employed until that stops.
And there's that.
So it is expected that job losses in federal government employment, they're going to continue for the months ahead. But as you see, that they have their mechanisms to smooth out the figures over time. Okay, now I want to show you this. This is a video clip of the Labor Secretary talking about how the tariffs are going to affect the labor market. So please.
Real quick, before she talks, we've been saying this for a long time, especially with Biden's administration, the amount of federal government jobs that they added and to me, it was fluffing unemployment numbers the entire time. And it's obviously continuing even now. They're not cutting as many jobs as they said they would. And part of it is because regardless of what side you're on, if you're a Republican or you're a Democrat, regardless, they're going to want the numbers to look good, and they're going to do everything they can to manipulate the numbers to look as good as possible. Now, we can look at the data and we can see glass half full. Like, there is potential here, but we also know it's going to get worse. It shouldn't get better. We know UPS already talked about cutting 20,000 jobs. They're going through a lawsuit with the union, I believe. I could be wrong about that, but I thought I read headlines where the union's looking to sue UPS for cutting jobs. But what do you want them to do? The other thing is, we know that a lot of companies, because of the tariffs, there's going to be supply chain issues. There's going to be a lack. Margins are going to get hit, so profit margins are going to be hit. Which is, what do you think they do with those profit margins, right? We know that inventory is going to be low. There's going to be some empty shelves in the next couple of months, and it's not going to be forever. It's not like it's a long-term thing, but it is going to be a little bit of pain. And from my understanding, a lot of manufacturing in China has already started, but apparently there's reports that China's hurting right now. So I wanted to look at that news article as well. But from my understanding, this is what it kind of looks like. If my screen will pop up, there it goes. So this is what it kind of looks like from my understanding. So we knew earnings reports were gonna beat all day because the tariffs didn't kick in last quarter. They kick in this quarter. So between Trump easing on tariffs and earnings reports coming out nice, the stock market has been booming. It's been great. It's everything I thought would happen to this point has happened. Where we thought we would see a drop, I'm like, yo, double down, dollar cost average, keep buying. If you can afford to buy, this is the time to buy when everybody's scared. If you look at the fear and greed index right now, let me see if I can find it. Penny, shut up. Shut up. Check it out. This is the fear and greed index. Remember a couple weeks ago, this was down here? It was down here. Look where it's at now, right? This ain't lasting forever, guys, because when all the next reports come in, everybody's high and mighty, this is what you're going to start seeing. You're going to see the 20,000 jobs UPS cut, and who else? Who else cut jobs that we don't know of yet? We know people are cutting jobs because they're losing out on profit margins, because when the tariffs hit, they halted shipping. They halted importing. And we know this because the shipping and the ports are down 35%. Okay? It's not going to show up now. We're not going to feel that now. But in the next month or so, the next couple of weeks or so, we're going to start feeling it. And when we start feeling it, it's because the companies already started feeling it. Chances are more job cuts are coming. If Trump is doing what he's supposed to be, what he says he's doing, and he's cutting more government jobs, not just 9,000, I mean, we're going to see unemployment numbers. We should see them go up. And all of this right here that you see is going to start creeping back down this way, I think. But I'd love to hear what the Secretary of Labor has to say. Let's listen. And what Clearview Tax has to say.
Please take a look.
I'm curious, with the announcement of the tariffs, they've been paused, most of them, but we do have some in place. What impact are you hearing in terms of how tariffs could impact hiring? What are you hearing from employers?
Well, the president assembled a great trade team. When I think about, the Treasury Secretary, when I think about the Commerce Secretary, when I think about the Trade Representative, their job was to negotiate with a lot of these companies to repatriate back to the United States, and then we're seeing those investments. I mean, we saw companies stand up and say 50 billion, 500 billion, even some companies that are saying, I want to do 100 million. I want to be part of this. Mm-hmm. When we skill this workforce, the concern for the tariffs, it was fair trade practices is what the American people deserves. That's what the president said he was going to do. That's what he campaigned on, and now he's delivering on those promises.
Okay, so you just saw that. So the Labor Secretary is basically saying that she expects more companies to bring back their manufacturing to the United States of America, that essentially the plan's going to work. So in this video...
Yes, but do you know how long it's going to take? It doesn't just happen overnight. It doesn't just happen in Q2. You're lucky if in Q4 it happens. So what we're essentially, what I think, we're essentially going to see unemployment start to go up, creep up, creep up, creep up, and eventually it might stabilize and then it might start going down. But this doesn't happen next month, I don't think. And if it does, this is the best administration I've ever seen in my life, ever. If they do it, they're goated, but I doubt it. But they have to stay, if they really want this to work. And like I said, I'm good with this. Like, I'm okay with this plan. No, but I do. I'm okay with this plan. We just got to be realistic with the people, because what's going to happen, and this is what Elon and Trump both do. They overpromise and they underdeliver. When they do deliver, we're happy. It's great, but it's painful the entire time, and it's a lot of volatility the entire time. When just be straight up. Make sure you're warning throughout. Tell people, you took credit for this. That it's okay to take credit for the number right now, but explain that we see unemployment start to creep up a bit, but the plan is to stabilize and start to see manufacturing jobs come back, and this will decrease. Because right now we're losing manufacturing jobs by 1,000 every single month, right? Let's see what else they have to say.
Process, whether there's going to be short-term pain ahead in the transition.
That's
and you're
what
going to
I'm
see the
talking
Labor
about, right?
Secretary say that she doesn't expect any short-term pain. So please take a look.
The exact opposite of what I said. I think they need to make sure they're communicating with the people. And I understand why they're doing this. But it makes things much more volatile, much more. The problem is, if they say in the short term, they think it's going to get ugly. If they do that, what's going to happen to the stock market? And if that happens to the stock market, approval rates go down. The administration just can't afford it. So they have to do this. But she's not being honest. I don't think. I hope she's being honest. I'm praying they are right. I am rooting for them. But chances are they might not be wrong either long term, but it's probably more in the middle.
To your point, this week we heard from Commerce Secretary Howard Lutnick, who says he expects tens of thousands of jobs to be created from the reshoring of automakers' plants to the U.S., as well as investments from the likes of Apple to NVIDIA, Taiwan Semiconductor. My question is, will it be a couple of years before we see the real fruits of job creation from these investments? And could there be some pain in the short term as you look to position the job market for stronger growth?
Well, I certainly think the Commerce Secretary is correct in the fact that as they've done these trade negotiations and companies are reinvesting and really finding confidence, they need that workforce. So my job is to be on the ground and do so. As we build manufacturing, think about transportation jobs are growing month over month. Manufacturing jobs have grown month over month. the workforce is going to be necessary. It is my job then to follow right behind my partners in the cabinet and make sure that workforce is there. Is there going to be pain? I don't see it as pain. I think of it as positive growth for the American people. The expectation is there. And also I think about the Secretary of Energy, or I think about Congress and deregulation. We want to move things faster, and I'm going to do everything I can to have that workforce ready. So when they do their job, I come in right behind and those businesses are secure.
Okay, now in this video clip, the labor secretary gets asked about the impacts of DOGE. How is that going to affect the labor markets?
You know, that's a great question. Yo, whoever the interviewer is, amazing interviewer, asking the right questions. That was the next thing that I was thinking about. Okay, this is what she's probably going to do. They are going to fluff unemployment, and they're going to keep it down here by creating government jobs, by manipulating it with government jobs, or trying to incentivize other industries to hire whatever they can to keep these numbers down while unemployment increases, right? They're going to be offsetting this with their own manipulation on the side. And then when they start seeing manufacturing jobs come back and unemployment start to drop, then they'll start cutting these temporary jobs, is for lack of better words. Then they'll start cutting those. And then we'll start to like kind of see like a balancing act between our government and actual organic jobs that are created through capitalism. So let's see if I'm right.
It's going forward. And please take a look at how she responds.
Madam Secretary, what about on the government side? We saw 9,000 jobs that were cut from the federal government last month. We know that the DOGE has been looking to cut federal government jobs. What can we expect in terms of the impact going forward when it comes to DOGE's cuts? Because this seems like sort of a minimal amount, if you will.
Well, the mission of DOGE was to streamline, modernize, do more for less. And that's what we're seeing. But when you're talking about negative impacts, there isn't one, because what we're seeing is an increase in a lot of the local public officials growing. So closer to the people. I was a former mayor. Being as close to the people as possible is what's key. So yes, the federal workforce is on the decline, but the private sector.
Hey, you know what? She might have changed my mind a little bit. She might have changed my mind a little bit. It's true. The whole point of cutting these federal jobs is because it's not the federal government's job to dictate what's going on that a lot of these states could handle at the state level. How that would impact the states, I don't know. But there is going to be some compromise there as well, because now the states are taking on more responsibilities. No? Am I tripping? Let's see.
Workforce is increasing, and the local sector of public workforce is increasing. So, this is all positive. We see no pain. We see no disappointment. These are good numbers.
I'm sorry, guys. Hold on. Penny. Isn't it loud?
This is a good day for America. This is a good day for the American worker.
Okay, now I just want to end by saying this. So last week, the GDP figures came in and they were negative. So this means that the US economy shrank in Q1 of 2025. And President Trump blamed President Biden. And for this jobs report, the stats came in good, and President Trump took credit. Okay, so I recently made a video giving proof why the negative GDP was caused by President Trump. Now, I showed the evidence, and nobody can deny it. But to be fair, I'll give President Trump credit for this better than expected jobs report. So the reason why I'm saying that is it's because the report beat analyst expectations. The expectations were that tariffs and DOGE would plummet the numbers to 133,000 or below, but that didn't happen. So anyways, that is your status update for the labor market. Please.
But they also didn't cut as many jobs as I thought they would cut, right? I do like the argument that local government will make up the jobs that federal is cutting, and it might actually create more jobs. But I don't know what kind of costs that the states will take on and how they're going to make up for those costs with these new jobs, right? We'll see. That was good. That was that was important. So glad to see it. We just got to keep watching it. That's one of the things, one of the reasons why I like to pay attention to this stuff. And you guys, you will see by the end of the stream, I think so as well, is the way that I invest and my businesses, the way I make money, it's all affected by this stuff. So it's good to pay attention to it. Cool. Next, I wanted to talk about, I briefly discussed this in the video we just watched, but apparently, Fox Business came out with a headline that there's things behind the scenes happening in China that haven't been revealed yet. And they're saying that China's getting crushed. I'm getting mixed. I'm on the fence about this one. I'm not 100%. I'm not sure about this. There's a lot of propaganda going on from all angles. And then through, my relationships with people in China, I can tell you it's a little bit of both. They were honest with me when, things were shut down. They said, yeah, a lot of people are at home. They're not working. But the same people came back and said, yo, we're back. We're working again. So there are some that are affected by it, but not as badly as my friends in China thought it would be. They thought it would be worse. And people in China are just they're positive about it. So she said they're that they see things, they see growth. So I don't know. We'll see. Let's check out this video and see if we can get any new perspective here, insight.
Ford joins me now. It wasn't so much rhetoric. I mean, he was describing what is happening in China. And of course, China, you never trust the statistics coming out of a communist country like China.
It's true.
They're always lying about their stats. But Are they really hurting as bad?
America can do that as well, obviously, but definitely China's worse.
And won't that force them to the negotiating table?
Well, I think right now they're probably trying to figure out this is what you pay diplomats for, to find a face-saving way to get the ball rolling. So I'm sure there's things behind the scenes that haven't been revealed yet. And in terms of China itself, it's not just the short term. What are lessons they're going to take in the future, especially on the military side? The military is not very happy.
So NIO is a EV company. I bought this when it was like $14. Thank goodness I got out of this. Thank goodness I got out of this.
With Xi Jinping, so who knows what's going to happen there. So a lot of uncertainties, but the sooner we get this done, because there are literally tens of thousands of small businesses in this country that depend on parts or imports from China. So the faster we get this done, the better. And I'm waiting, as everyone is, get some of these trade deals done on the table so people can see real progress is actually being made.
Well, one of the things that I think is scaring China right now is when the EU commissioner was in town a week ago, and he was saying if China tries to dump the stuff that was meant to go to the U.S. on us, we're going to apply the same kind of tariffs that the U.S. is now applying to China, which would mean they would be totally destroyed because they can't. The two largest trading partners they have is the EU, the collective EU, and the United States. Without them, they're sunk.
Well, yes, and this will finally, I think, have a real battle in China. You're going to have the hardliners saying, hey, we must be autarkic again like we were in Mao's times, can't trust the rest of the world. I think you have some reformers probably lurking there and saying we need to develop our internal economy so we're not so dependent on exports and the property market, which is only now finally maybe reaching bottom, that bubble. Yeah. So maybe reforms come in the future. But in the meantime, we hope they don't try to deflect attention on the disaster by doing something like seizing one of the islands around Taiwan.
Right. Let's bring it back home. Treasury Secretary Scott Bessent defended Trump's economic approach in a new Wall Street Journal op-ed. He said, quote, in the first 100 days of his presidency, we've laid the groundwork to rebalance global trade, restore America's industrial base. The American people should expect to hear the engine humming during the second half of 2025. With all pistons moving, we're going to see more jobs, more manufacturing, more growth, a more robust national defense, higher wages, lower taxes, less burdensome regulation, cheaper energy, less national debt, and less dependence on China, all while maintaining a strong dollar. Steve, I loved that he ended with a strong dollar, don't you?
Yes, because there are elements in that administration to think, as happened in the Bush 43 administration that a cheap dollar is a way to get instant trade and boost up the economy. All it does is lead to disasters like we had in 2008 and 2009, inflation. So I hope the rest of the team inside the White House and Treasury Department are listening, and also the Federal Reserve listening, because the Federal Reserve is sat by while the dollar has lost value, and they're meeting, as you mentioned, tomorrow and Wednesday. Are they going to finally realize that their main task is a stable dollar, not trying to manipulate the economy? It didn't work for the Soviet Union. It doesn't work here.
And it helps Americans. Average Americans want to make sure that the dollar they earn today is going to be able to buy them just as much tomorrow or a year from tomorrow as it does now.
And so they have flawed models at the Fed, like prosperity causes inflation. But one interest rate they should cut tomorrow, but won't, is the interest they pay on bank reserves.
Yes.
Right now it's 4.4%, so banks have that money parked there, doing nothing but earning free interest, easy interest. So cut the rate, cut that by 100 basis points and make it clear you want lending big again.
The great Steve Ford.
So, I hate when Donald Trump attacks the Federal Reserve. The Federal Reserve is supposed to be independent from political influence. And that's one of the things I don't like that Trump does. But I do wish he would act a little bit faster. I'm not going to lie. Number one. Number two, where this headline I just feel like was misleading. I didn't learn anything new from this. Nothing. We know there's things happening on behind the scenes. We know China has some real estate bubble. The one thing that I wanted that I did take from this video is it kind of backs up my claims where I don't think in the short term we're going to see all of these jobs coming. But in this video, somebody says they think it's going to be in the second half of 2025. And they said a lot of great things. I don't think it's going to be that soon. I think it's going to be end of Q4, first half of 2026. And even then, it might be later than that. But by then, people might hate Trump. So people might have given up on Trump. He might lose a lot of supporters. So they have to get it done fast. And if they get it done that fast, honestly, if they get it done second half 2025, even if it's by the end of the year, I'll be impressed. I will be impressed. What about you guys? Now, real estate has been insane for people. Mortgages have been skyrocketing because insurances have been skyrocketing. Property taxes have been skyrocketing. People are getting surprised. One of my mortgages just went up $500 a month. It went up from $6,300 a month to $6,800 a month overnight. I didn't even notice it. I'm looking in my bank account because my mortgage was $6,300 and I would always put $7,000 into that account every month. And I would check back 6 months and there would be a few $1,000s extra in that account. This time I look, I'm like, wait, it hasn't grown that much. What the hell? And when I look, they were taking out more money than usual. The mortgage went up. Ain't that a thing? Ain't that a B? So, and then my other property, I remember it went up from $2,900 to $3,900 a month. Another property that I own. It's insane. And, I do very well for myself, but I know a lot of Americans are being affected by this, and $1,000 extra a month by surprise is a game changer for a lot of Americans, man. Especially knowing what we know now, right? We know there's a lot of Americans that a $400 surprise expense would hurt the average American. So it's scary. And then you're hearing rumors that, real estate payments, people aren't making their payments. It's at an all-time high. So, anyways, I found I guess Warren Buffett wanted to speak on how real estate is so much harder than stocks. But before we do that, I want to see if there's any news on what's going on with mortgages.
Do an analysis every year at least with the mortgage that I got, right? And so they did an analysis, and basically my mortgage increased by $1,000.
They got me too. They got me too.
And I asked them why, and they were like, something about my house is a new build, and so I guess they charged me for the taxes when it was just the land for 2 years. Then after year 2, they add the taxes with the house actually on it. And they were like, yeah, your builder is supposed to tell you. They didn't. They didn't. And so I asked them,
They're
can I
not
sell the
supposed to
house?
tell you no.
And they were like, there's no equity in it. I see me smiling, but come next month, I'm literally going to be in tears because $1,000 extra a month. I legit want to move back home and live with my parents.
See?
Where?
But I don't have that option. I'm sick. I'm sick. Honestly, don't buy a house if you're single. Buy a house when there's 2 incomes coming in.
I wouldn't say that's the advice. I would just say buy a house, not that you're approved for, but what that you can afford that's below your means. What's up, puppy? What's up, girl? Yeah, they came in. I don't have them. They're in the mailroom. They weren't in there? You check? Are you sure? It says on my Amazon that they were delivered. They're probably in boxes or in the mailbox. Nah, they're in the mailbox. So, anyways, I wouldn't say all that. I would just say make sure you buy something knowing that the taxes could go up and that you can afford it. Right?
Because, baby, you gonna need it.
Mortgage has gone up another $200. So over the last 3 years, my mortgage continues to increase $200. So over the last 3 years, my mortgage has gone up $600. And it's shocking. It is very shocking because I don't feel like people talk about this.
Well, you know what's interesting to me? People talk about landlords being greedy and raising rents, and I'm not saying there aren't a bunch of greedy ones, but landlords have to raise their rents because they see these increases. A lot of American people that have been renters, they don't understand how mortgages work and that people's mortgages go up until they become a homeowner. And then when they become a homeowner, then they realize, damn, this is tougher than expected. And now they start understanding when they rent a house, there's costs in there that you're paying that are being paid for by your rent. You may say, if I buy a house, I got to pay property taxes. I might as well just rent. What you think? Your rent isn't covering their property taxes? Of course it is. Of course it is. What you think? It's not covering their home insurance? Of course it is. They're trying to, at the very minimum, break even. Some of them don't even do that, but some of them are trying to break even. And rents have to go up every year because all these taxes, all these things go up. And guess what? Guess what determines this stuff? Politics. Local politics. The president the party and the policies that you're voting in matter because it affects you whether you know it or not. And it's not until you're actually affected by it that you start to pay attention because these crazy insurance fees a lot of times has to do with the policies and the laws that are put in place. These crazy taxes, these local property taxes, a lot of it have to do with the budgets that politicians are pushing for to get passed when it comes to schools, when it comes to everything, right? And so it matters. So, man, it's no different than taxes. A lot of people, when they're poor, they vote Democrat until they got to start paying taxes. And then they're like, oh, shit, I might be Republican now. You see it all the time. That's usually the evolution, you know?
People are all, often glamorizing home ownership, but not really talking about the reality of home ownership in today's economy. So not only has my mortgage gone up, my HOA continues to increase every year. And
that's why I tell people don't buy condos, townhomes, unless you have looked at the historicals of the HOA and you know what you're getting into.
It's the whole reason.
Look, rent for the rest of your life. Who do you think's in more control? The person who owns the mortgage or the renter? Who do you think's in more control? The person who owns the mortgage. You can go talk to your bank. You can work something out. A renter who's not paying their rent is going to get, see ya, and it's going to mess up your credit. It's going to mess up your credit as well. I'm not saying renting isn't less responsibilities. Of course it is. But when you have more responsibilities, you have more control as well. So you just gotta decide, what's, you essentially, you gotta choose, what evil you're gonna adapt to, right?
I even started working 2 jobs for the last 5 years, hustling my ass off because I want to purchase my home so bad. I feel like a part of me is starting to realize there's so many cons to owning your own home. For example, number one, if I were to buy it in California, I would have to have a 30-year loan, and I don't want to spend the next 30 years of my life paying off my.
You don't have to spend the next 30 years of your life. All right, I can't take this anymore. A lot of people shouldn't be buying homes. A lot of people buy homes and they don't get educated first. They just do it because that's the status quo. You have to get informed. I can't watch this. Like, if you don't understand debt and the 30-year stuff versus the 15-year stuff, like don't buy a home. Just rent. She's got a point. And it has nothing to do whether she's right or wrong. It's just right for her because she's just not informed. You know what I mean? All right, so that was supposed to be, a stepping stone to Warren Buffett talking about how real estate is so much harder than investing in stocks. Because I really want to get into stocks on this live stream. Let's check it out.
Good morning, Warren, Greg, and Ajit. My name is Jackie Han. I'm from China and now work in Toronto, Canada. This is my 8th Berkshire Hathaway meetings at this point. I've probably spent more time with you than most people spend on Netflix.
Yeah, Rich, you would just get a lease. Just have her sign are you renting or do you own the home? If you own the home, you just get a lease for the room. And that's legit. You know what I mean? And she can pay you security deposit, she could pay you through check, through cash. But you just want to make sure you deposit it and you categorize it as rent, because then you probably have some tax advantages there with that room, maybe. But speak to an accountant first.
As you might guess, coming from a Chinese family, we've always had a soft spot for real estate. So the real question isn't why don't you own a house? It's why are you still buying stocks instead of more property? So here is my question.
Coming from a Chinese background, we really have a soft spot for real estate. That's interesting.
With today's high interest rates and global uncertainty, do you still believe in being greedy when others are fearful, or the value investing facing new challenges in today's environment? Thank you.
Yeah. Well, in respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, you find out you're dealing with more than the equity holder. But there have been times when large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they were a lot easier to do. So Charlie did more real estate. Charlie enjoyed real estate transactions, and he actually did a fair number of them in the last 5 years of his life.
So I'm sorry to cut it off, but I just want to, I said something about the Chinese man saying how it's a soft, real estate holds a soft spot in his heart. And the reason why it was interesting to me is because China has a policy that you can only lease land. You can't own it. And your lease is only good for 70 years. The problem is that the current law doesn't really clarify what happens after those 70 years. And I was speaking to a friend of mine that lives in China who owns her apartment. And she was saying that nobody really knows what's going to happen. And that's because it hasn't happened yet. When this policy was started, 70 years hasn't come up yet. So it's about to come up for the first time. And nobody really knows what's going to happen, but people think what's going to happen is just going to automatically renew your 70-year lease. But it's still weird how the state owns all the land. You, as a citizen of that country, no one can own land besides the state, which is insane to me. Private property is protected here in America. But at the same time, it's kind of like a nothing burger because, what's the point of the law if it's just going to automatically release 70-year lease just in case we want to take control over our citizens? That's what it kind of screams. But culturally, the Chinese people believe in land as security. And they believe in home ownership as a prerequisite to marriage, apparently. And I could be wrong, but, this is just what I'm reading. And then, in China, the stock market is much riskier than here in the States. So real estate had become the default safe haven. And I think that's why you see a lot of Chinese people buying up a lot of real estate in Miami, in Florida. I think Governor DeSantis passed a law where Chinese people couldn't buy any more real estate in Florida. Let me see. Because they was buying everything. So it's starting to make sense. Culturally, they love real estate. But it's just funny how there's not very much talk about, that 70-year lease law that Chinese people can't own states. So look, key provisions of Senate Bill 264. Chinese nationals, individuals domiciled in China who are not U.S. citizens, are lawful permanent residents, are prohibited from acquiring agricultural land or property within 10 miles of military installations and critical infrastructure in Florida. An exception allows holders of non-tourist visas to purchase single residential property under 2 acres, located at least 5 miles from such sites. Citizens from Cuba, Venezuela, Syria, Iran, Russia, and North Korea face similar restrictions, primarily concerning properties near military bases. Okay, so the headlines kind of tricked me. There's caveats to it, but there is restrictions to Chinese people buying more than 2 acres, especially near critical infrastructure in Florida. So just interesting, because they like real estate, man. So now I understand why he was saying, real estate is, as a Chinese man, is like, dear to their heart. But let's continue listening to my dog, Warren Buffett. I don't know if you guys knew that.
But he was playing a game that, and it was an interesting game to him. But I think if you'd asked him to make a choice when he was 21, he had to either be in stocks exclusively the rest of his life or real estate the rest of his life, he would have chosen stocks for the second. There's just so much more opportunity, at least in the United States. There's so much more opportunity that presents itself in security market than it does in real estate. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they've borrowed too much money against it. Maybe the population trends are against them. But to them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes. And the trades are complete when they're complete. In real estate, when you make a big deal with a distressed lender, when you sign the deal, then you go into another phase. I mean, then people start negotiating more things, and it's a whole different game, and a different type of person, to some extent, enjoys the game. We did a few real estate deals that came our way in 2008 and 2009, but the amount of time that they would take us compared to doing something intelligent and probably better in securities, there was just no comparison. I mean, in a real estate deal, every sentence is as important as a person, and in stocks, if somebody needs to sell 20,000 shares of Berkshire or something, and they call us and the price is right, it's done in 5 seconds, and it closes all the time.
I'm not gonna lie, man. I have about $4 million in real estate, and I'm loving the stock market. I wish I would have paid more. I wish I would have cared about stocks much sooner. I've always been educated on stocks. I was so busy with my own businesses. I was so busy with real estate that I just didn't spend a lot of time focusing on stocks because it was a new thing to learn. And I had already learned real estate. And I like real estate. I do like real estate, but it ain't for everybody, is what I've noticed at all. So it's very interesting being somebody that has touched all of it. It really resonates me when Buffett says, it is nice to be able to just liquidate. It's nice to just be able to make decisions with a few clicks and buy a bunch of equities. It's nice to be able to look at financial statements. And throughout this live stream, we're going to go deeper into this. I'm going to teach you guys how to look at financial statements, right? Like, what does all this shit mean right here? What does all this mean? A lot of people don't know, but I'm willing to teach you guys. Because it makes it's like going on Redfin or LoopNet or auctions and looking at the P&Ls of a investment property or an Airbnb and making sure that it cash flows and looking at the expenses. And then you're looking at you got to look at the mortgages and making sure that when you put it on a spreadsheet that it's going to cash flow. And it's going to cash flow with maintenance and with property management and all of that stuff and vacancies. So it's very similar with the stock market, but it's so much more accessible. It's so much easier, and it's way less work, in my opinion. So it definitely resonates with me, what Warren Buffett is saying here.
You certainly wouldn't want to marry your daughter, or
hey, shout out to Tony. Thanks for
well,
pulling up,
actually,
man.
In stocks, partly that's because they're probably having their wires or phones or whatever.
Yeah, Rich, I agree. I think it's good to have a little bit of everything, But I also think there's nothing wrong with house hacking to build up your real estate portfolio. In 10 years, you can easily have 4 or 5 properties if you just house hack, and I'll show you what I mean by that in a bit.
Whatever it is. Recorded as to what they've said and everything, but the completion rate for working on anything in stocks is, assuming you got a meeting of the minds on prices, essentially 100%. In real estate, it just begins when you agree on deals, and then they take forever. So. For a guy 94, it's not the most interesting thing to get involved in something where the negotiations could take years, and we have the capability there have been some huge failures in fact, if you go all the way back to Zeckendorf in the 1960s, he was going to change the world, and Century City out in California is a product of his. And if you go to Urus, if you go to, he was sitting on top of the world with the Urus buildings. And so people tend to get in trouble in that business. The banks usually don't want to recognize it, but that takes a long time to go through the bank processes. They just got through redoing the Musk loan that he did when he was buying it 3 years ago, the company that's now X. And, 3 years to work out a transaction that, where you've got parties on both sides that aren't ready to act. That we find it much better when people are just ready to pick up the phone and you can do hundreds of millions of dollars worth of business in a day. I've been spoiled, but I like being spoiled, so we'll keep it that way.
He has been. So let me break this down with house hacking, okay? I think it is smart. This is what I've always done. I've owned businesses, small businesses, real estate via house hacking, okay, and stocks. Oh, and some crypto. I like crypto as well, okay? But this is how I've always done it. I had my main job, and I worked my ass off to make as much money as I could in the main thing. So I don't care if you're a nurse, if you're a chef, if you're a hairstylist, it doesn't matter. Try to be the highest income earner that you can in that space. So if the income potential for you as a hairstylist is $150,000 a year, then try to get there. And I know it is because I've owned a salon, and I had a hairstylist that worked at the salon. She was making $3,000 to $4,000 a day. Nah, bullshit. I'm telling you, she would have 3 or 4 clients at once, had 2 assistants, and was booked all day, would work 3 or 4 days a week, and make $3,000 to $4,000 a day. I'm telling you. And I have barbers. I own 10 barbershops. Almost 100 barbers work for my brand. And I have barbers who are in their 20s, early 20s, that make $200,000 a year or more as barbers because they take the main thing seriously. And when you try to maximize how much you make at your main thing and you live below your means, Dave Ramsey, pay off your cars, all that shit. That's what I did. I drove hoopties most of my life, okay, because I didn't want any car payments. So imagine you could make let's just be conservative and say, imagine you can make $150,000 a year from your main thing. You can live on half of that, on 75. So you have $75,000 that you can invest, okay? What I did first was I bought my first house with an FHA loan. And you can even do conventionals. Conventional is going to be 5% down. FHA is going to be 3.5% down. Okay. The big, do your own research. Talk to a mortgage broker. Understand what the numbers look like. What kind of interest rates you're going to get. Understand whether or not you're going to have PMI, mortgage insurance. If the mortgage insurance comes off after 20%, I got my mortgage insurance off within 2 years because of the equity that grew in that property, right? But the first thing that I did was I bought my first property. And at the time, it was very inexpensive for real estate. This was 2012. I bought my first property, believe it or not, for $90,000. So the 3.5% down on $90,000 plus the closing costs and all that stuff was nothing. It was like less than $15,000, okay? And my payment was less than $600 a month. This house today is worth $350,000, okay? Now, people are like, oh, man, you got lucky timing. Yeah, lucky timing. Guys, for the history of real estate, are there going to be markets that are way better historically? Yes, there's going to be some years that go crazy, and there's going to be some years that go flat, and there's going to be some years that decline, but it's very rare that there's a declining market. I'll show you what I mean. So if you look at my screen, okay, you'll see historically, since they've been tracking this over the last 100 years, okay, the home price doubles roughly every 10 years. It's the rule of 72. Prices double roughly every 10 years, depending on the market you're in. Obviously, if you're in a market that's flat, that there isn't a lot of job growth like Detroit, that's not going to happen. But if you're in places like Tampa, like Columbus, not Columbus, what is that? Columbia, Texas, places in Texas. You guys know markets that are growing, that people are moving to. Houston, Atlanta was one for a while. Nashville, Tennessee, Nevada. There's all kinds of cities that we know job markets are growing. Austin, Texas, and those markets are thriving, and some of them are doubling much sooner than every 10 years. Okay, so you got to buy in a market that is going to appreciate. All right, but on average, across the board, across all of the states, all of the city, Columbia, South Carolina, that's correct, Tony. That's what I was looking for. I was going to say North Carolina. They will double every 10 years, and this is for the past 100 years. So yeah, it was great when I first bought my first property because it did a lot better than doubled. At the same time, this was in 2012, right? But just because I timed it better doesn't mean it's still not an opportunity. It doesn't mean it's still not an opportunity, especially if you're in it. Here's the key word: long term. Okay. And so what you do is, listen, this is why I tell people, if you study tax law, and by the way, I own an accounting firm with 335 clients, 24 employees, and they teach me this stuff. They keep me up to date with this stuff, right? There's tax incentives to this. You pay less taxes because you buy real estate. But the government wants you to buy real estate, and they want you to provide housing. They want you to invest in real estate because they want more housing for the American citizens, the American population, so that the GDP continues to grow, so that tax revenue continues to grow, and everybody's happy. Our economy's happy, right? And so they incentivize you to buy homes, okay? And what they say is, if you live in the property for 2 of the last 5 years, guess what? If you sell the property, you pay 0 capital gains taxes. You know how people be like, oh, if you win the lotto, you got to give up half? Well, with the real estate, if your property goes from 90,000 to 350 like mine did, and you go to sell it, guess what? I pay 0 taxes on that, up to, I think it's 250,000 if you're single and 500,000 if you're married. So if you make 500 grand off of that property, you pay 0 in taxes. Okay? So what I suggest to people, I don't even tell you how to sell it. I just say, just in case one day you need to sell, live in the property for at least 2 years. Okay? And then what do? You rinse and you repeat. Because guess what? An FHA loan is not a first-time home buyer loan. It's just your primary property. So what you can do is, let's say this is your first house, okay? And you're like, you know what? I'm going to move into this house, and in the 45 to 60 days that it takes to close, I'm going to get a lease on this one, and I'm going to find somebody to rent this house. And let's say I'm renting it out for $2,000 a month. I can use 75% of that towards my income to qualify for this second home. And now you have a rental property, right? You have a rental property here and your primary here. And in 2 years, you do it again. And in 2 years, you do it again. And in 2 years, you do it again. Next thing you know, you got millions of dollars in real estate that other people are paying off for you. Now, is it a perfect system? Hell no. This is why with your spreadsheets, you have to have maintenance costs, vacancy cost, management cost. There's different costs that you have to make sure you plug into the spreadsheets to make sure long term you will build wealth with this portfolio. And guess what? It's just 3.5 to 5% down every time. So it's not like you need 500 grand every time you're going to buy a house. You just need a percentage of it. And I know the average home is 400 grand right now. So what is 5% on 400,000? 20K plus closing costs. I would say put another 15K. So every time you want to buy the average home in America, it's going to cost you $35,000 with a conventional loan. Okay. But remember what we said here? We're making 150. We're saving 75. So if all I need is 35, that means I still have $40,000 left to invest. So I can house hack every 2 years and still have money left over to invest. Because 1 year we spend the 35, so I have 40 left over. The next year I still have 75. Okay, so that's $115,000. Okay. And then the following year, we only have 35K to invest. I'm sorry, 40K to invest. Why? Because we got to take another 35 to go buy another house. And obviously this number is going to increase because home prices go up, right? But as you're playing this game, you're telling me your net worth isn't going to be growing? Okay? And then what I'm doing, where's the original? So that's just real estate, guys. House hacking with real estate. Hopefully that I didn't confuse you guys. All right. That's just the real estate is we're house hacking. Every 2 years. Now, is that a set number every 2 years? It might be every year. It might be every 5 years. It might be every 4 years. You have to decide what's best for the money that you have. Because if your stocks are doing amazing and there's better opportunity here, then allocate most of your money here. If there's better opportunity in crypto, because let's say Bitcoin crashed 80% like it has done before, then when people are afraid, that's when you invest. Maybe we want to put money into crypto. I don't know. But what I can tell you is what I do now is I try to buy a piece of property every 2 years. I buy stocks. I spend $1,000 a week in stocks. That's my normal DCA, my normal dollar cost average. And we'll get into that a little bit deeper in just a bit. That's my normal dollar cost average is $1,000 a week. And then crypto, I put $150 a week. Okay? I put $100 into Bitcoin and I put $50 a week into XRP. And I just dollar cost average it, DCA. When this has a crash or a correction, then I put a lump sum in. When this has a crash or a correction, I put a lump sum in. When this has a crash or a correction, I put a lump sum in. And my small businesses, that's the foundation to everything. Everything starts here. Whether you're self-employed, whether you have a job or you have a small business, everything starts here. And this, okay, small businesses can go out of business, guys. Shit happens. So there's a term called pay yourself first. The way that I pay myself first, the way that I call it saving the game. When I was younger and we were playing, games and stuff before Wi-Fi was a thing, you had to manually save the game. Because if the power was to go out or somebody tripped over the power cord and turned off your console on accident, guess what happens when you turn it back on and you didn't manually save the game? You got to start all over. And that's what happens to a lot of small businesses in America. But as you're growing your small business or as you're growing in your profession, you should be paying yourself first. And the way you do that is these asset classes. You dollar cost average monthly or weekly on autopilot. You automate it. Like it's the first thing you do. That's how you save the game. That's how you start paying yourself first. And you have something to show for all your hard work. Okay. So that's house hacking. But let's get into stocks now. Okay. I don't know if that was helpful for you guys. The comments are really, really quiet. I lost some viewers. So maybe you guys thought that sucked. But I could tell you, I wish I would have been taught that when I was younger. I wish I would have been taught these things, these principles much sooner. Because I had to learn this over the course of 15 years, the hard way, going through it, making mistakes. And I'm grateful that I did, but I wish I could have watched a live stream like this back then, you know? All right, let's so you know, not to keep, we'll go into stocks in just a bit, but let's look at some news real quick because there's some crazy shit going on, apparently, breaking news. So let's check this out real quick.
To capture all of Gaza, the Associated Press says the IDF is tapping tens of thousands of reserves in order to do so. Meanwhile, the Jewish state is promising a stern response to yesterday's missile attack from Yemen on the port near Tel Aviv. General Jack Keane is with us now, and we were just talking in the break how there's always something going on in the world, but in this part of the world, Israel continues to fight on multiple fronts. They still have hostages that they're trying to deal with. Capturing Gaza in the midst of all of this with the Houthis attacking their airport, how do you see it, sir?
Yeah, well, what's really taking place here certainly is General Zamir came in on March the 5th, and he presented a new plan to the Prime Minister. Credit the previous chief of the Israeli Defense Forces for killing, somewhere in the neighborhood of 2/3, 75% of the Hamas fighters. But there's still several thousand left. And they did that in the past by conducting raids and then moving on to another area where there are Hamas fighters. General Zamir's plan is to take territory and then kill the Hamas or capture them in that territory and depose them from any future ability to have political control of Gaza. That's the end state. They recognize full well if they're not able to do that, it'd be impossible for them to leave Gaza and turn it over to some international force that would be willing to provide security for a new Palestinian-like government. All of that obviously is still circumspect and no decisions have been made. But from a military perspective, what is happening here is to finish off Hamas once and for all so they cannot have any political ability to control Gaza in the future.
What did you make of that attack on the airport? And I just want to show for everybody here, Israel has an Iron Dome. And we can put it up here on the screen for everybody to see how it works. And obviously, you know this very well, which is this is a way to intercept these missiles that are coming through. But one got through and hit the airport.
Oh, and by the way,
they have three systems. The Iron Dome defense is rockets against rockets and missiles, and then the mid-course is David Sling, and that's kind of mid-course missiles, some cruise missiles. And then the most advanced ballistic missiles are defeated by Arrow and also our THAAD missile system, which the United States has given Israel. Those two systems fail. The Arrow defense system and the THAAD missile system. And this missile was able to penetrate the airport. And it also, a similar missile, penetrated Tel Aviv in December. So obviously the Israelis are doing an autopsy on this. What happened? Why did they have failure? But remember, we take it for granted that if a missile is flying, we can knock it down because we've seen that technology time and time again. But there's always misses. And we don't really account for the misses very much unless there's casualties as a result of it.
Right, because it's also been so successful.
Here, but nobody killed.
It has been so successful. There is a rendering of a possible Golden Dome system here in the United States that we can show for everybody. This would be kind of a similar concept. If you can pull that up and everybody can see. This would be the idea.
Trump wants to create this. He wants to do something similar to Israel, but in the United States. And I'm with it. Please do it. Please do it. Make me sleep better at night. But I don't know, man. They're gonna take complete control of Gaza. What happens next, bro? I'm telling you right now. I don't know enough. It is the most. I've listened to 3-hour debates on this topic. Palestine and Israel, this whole conflict. I've listened to so many different perspectives, um, gone through that rabbit hole, and it is such a complex situation because I would love for just everybody to be happy in peace, but it goes so much deeper than what we see at surface level that I don't even like to speak on this conflict. I just hope shit gets better, and it doesn't look like it ever will. You got Houthi, you got Yemen getting involved, you got Iran getting like it's crazy, man.
The idea was,
and now Israel saying they're going to take complete control of Gaza. People, you already know the protests that are going to be happening in the States all over the world. I got stuck in a Palestine protest in London one time. That shit was scary. I ain't gonna lie. And like, don't get me wrong. I have Palestinian friends. I have Muslim friends, and great people. Most of them are peaceful. But they've said, I think 30% in the Middle East are radical, do believe no other religion should exist, and believe in what do they call that? Sharia law. So
some sort of protection. Do you like this idea?
Well, first of all, it's desirable to have a new concept to deal with where technology is going. We can deal with point defense, is what essentially Israel is dealing with there. In other words, defend Washington, D.C., which we're currently doing, defending the West Coast against the North Korean ballistic missile attack, which we're currently doing. We can do more of that on the ground than the United States. Not cheap, obviously. But the real threat is coming from hypersonic glide missiles. In the summer of 21, China launched what's called, apologize for the term, fractional orbital bombardment system, hypersonic missile that was launched off the coast of China, circumnavigated the globe in the southern hemisphere and came back to China. While we knew it launched, we could not track any of it.
Wow.
So being we can't track it, we can't kill it. And advanced cruise missiles are getting to the point where their range is increasing, and likely they may have the capability to do much the same. So given that technology, how do we defend against that? The answer is in space. The point defense system that I just described prior cannot do that. So you need sensors in space. You need interceptors in space. That means weapons on satellites to do all of that. And you need a lot of them because you're dealing with the globe. You're not just dealing with
next level,
IBM missile coming from Russia or China in the northern hemisphere. These things can circumnavigate the globe. And when they get back into the Earth's orbit, they're moving at 5 times the speed of sound, which is very difficult to defeat even in the Earth's orbit. So, desirable. The big question mark, is it feasible? We've got to do the research and analysis to make certain of that before we pour a lot of money at it. Listen.
I mean, who's going to do that? Who's going to create those weaponized satellites? SpaceX? Nobody has more satellites in orbit than SpaceX. Now, probably not the same satellites that we need, but I can see, here comes Elon again, about to get pushed out of Tesla by the board because he's spending too much time with the government creating space rocket launchers.
This is a presidential priority, and it has worthiness and desirability. But we got to be careful how far we go before we dump a lot of money on it. We're already going to put $25 billion on it to get us started in this. It could cost hundreds, but we've got to make certain that it is feasible. And I think the administration obviously is aware of that. Secretary Hegseth in the Defense Department is aware of that. I talked to officials about this last week on this very subject. So yes, this is a desirable program. It's in concept and theory phase in terms of its fulfillment. And we've got to do the research and development to make sure that it's feasible.
Such wise thoughts, and thank you for joining us on a Monday. General Jack Keane.
Yeah, this initiative was launched through an executive order signed by President Donald Trump in January. It includes intercontinental ballistic missiles, hypersonic weapons, and electromagnetic pulse attacks. space-based components. The system plans to deploy a constellation of 400 to over 1,000 satellites for missile detection and tracking. SpaceX, along with partners Palantir and Anduril, is leading this effort. Man, well, let me go buy some Palantir stock ASAP. I forgot Palantir is supposed to be part of my list. I need to see if there's any opportunity there, even though the market is closed. I probably should have looked to see if there was any opportunity with Palantir. I know I missed out on the last bull run. Well, I didn't miss out on the last bull run. I made money from Palantir on the last bull run, but I was just selling puts. So the project is part of a proposed $113 billion. Remember, he said they already allocated $25 billion, but it's going to be in the hundreds. So they propose $113 billion on top of what already is part of the defense budget for 2026. So these are the things that are increasing. People say, yo, Trump is cutting costs and stuff, but his bill is more than the last bill we had. And part of it is because of investment in infrastructure. It's CapEx. It's not OpEx. So it's one of those things where, you invested right now, but it's not something that's ongoing. You're investing it for a better tomorrow so that we can save money on defense in the future. Imagine you spend this money on this golden dome, and you don't have to have so many Navy ships with anti, defense, weapons and stuff. You can have less people in your military, things of that nature, right? So I see both concerns, but I like the idea of having a golden dome. I like the idea. So what do you guys think about? What do you think is going to happen with this? You got Israel planning to capture all of Gaza. We're going a little bit off topic with the Golden Dome, but obviously that was inspired by what Israel has, because the Houthis and Hamas are still launching missiles at Tel Aviv and all of that. And Israel says they're going to go capture the whole thing. Shit about to hit the fan, I feel like. All right, next topic here is, bro, we have so much going on, and I just feel like it's just a lot at once. Now, Trump he's signing an executive order. I think, let me just confirm. And I don't know why it took. Obviously, I know why. But why the hell did it take President Trump to come into office to sign an executive order that designates the cartel, the drug cartels, and transnational gangs as terrorists? Why did it take him coming into office? You're talking about organizations that have killed more Americans than any other terrorist group. Between fentanyl and all the drugs that they bring into this country, and all the people that they've killed and they've smuggled and that they put in prison because of the cartel. And it took Trump getting into office to sign this. Nobody cares. This didn't make major news. Not everybody ain't happy about this. Trust me, there's a lot of shit that I don't like that Trump is doing, but there's way more shit I like that he's doing. Way more shit. And no politician is perfect. But this should have been done. Right? And the reason why is because obviously there's so much money in it. We know that there's been proof that there have been federal officials, politicians, people on the FBI or whatever, the CIA, that have been involved in profiting from the drug trade. It's just a weird thing that now it's happening, and it definitely proves that Trump ain't got nothing to lose here. He's got no the corruption and shit. You can say he's corrupt with his small businesses and the shit that he's done on the private level, but I don't see the same level of corruption that we've seen from lifelong politicians with our tax dollars and the policies that they're pushing for. Why the hell is this just now happening? And so with that being said, this leads into this new piece of news where Trump but asked the president of Mexico, Claudia, if we could help. We can bring our military into Mexico and we could help them out. And I think the reason why he's asking if they can come and help out is because you see shit like this. Look at this. This was 6 months ago.
To Mexico, where the Mexican army has killed at least 19 suspected members of the deadly Sinaloa cartel. In an overnight ambush on Monday, the army has given the Sinaloa cartel one of its biggest defeats in recent months. President Claudia Sheinbaum.
A major shootout took place between the Mexican army and one of the most deadly drug gangs in the world, the Sinaloa cartel.
These cartels are killing their policemen. They're killing their military. They're literally having a civil war right now.
Shootout took place about 11 kilometers outside the Sinaloa state capital, Culiacan. According to the Mexican Defense Ministry, the gunfire took place after more than 30 cartel gunmen fired on Mexican soldiers. As the Mexican army retaliated, they managed to shoot and kill at least 19 cartel members. The Mexican army also seized 30 firearms and military-style vests and helmets from the scene of the shootout. One cartel member was unable to flee and was arrested by the Mexican military. He has been identified as Edwin Antonio, a local leader of the Sinaloa cartel. The latest blow to the Sinaloa cartel faction comes amid unprecedented flare-ups of cartel violence in recent months. Between October 6 and October 15, Mexico saw the brutal killings of 2 mayors. The killings didn't stop there, and indigenous...
They killed 2 mayors, and they be beheading them. Look at this. They killed 2 mayors. People don't even want to be in the police anymore over there.
This priest was also killed right after officiating Mass on Sunday. These killings have sparked widespread outrage against the newly elected president, Claudia Sheinbaum, who had vowed to crack down on cartel violence.
We have called on the government to clarify this case and bring justice to Father Marcelo, a great priest that always advocated for the poorest and for the people in need, that always listened and helped and now has been murdered. We demand all the government agencies to cooperate and give answers to clarify all these.
Before that, I would like to express that we regret the murder, the assassination of Father Marcelo Perez in San Cristobal de las Casas. The investigation is being carried.
So I'm showing you this video because look at this news right here.
The feds have been busy working to quash what they say is cartel-linked gun trafficking. Officials seizing this cache of weapons, grenades, and ammunition. And as the cartel concerns mount, Mexico's President Claudia Sheinbaum now rejecting a plan from President Trump to send American troops into her country.
So they struggling with the cartel. They still smuggling illegal weapons, explosives, fentanyl, drugs right through our border. And we're like, obviously your military is overwhelmed. Let us help. These are terrorists. Do you want more tariffs? I'm just kidding. But I feel like that's what's going to happen next. How are you going to decline the help? And I know what it is. Obviously she's the president there and they're prideful and, they want to handle their own shit on their own, and she don't like Trump. Obviously, she don't want our military in her country. Could you imagine if, obviously we would never need that because we can handle our own shit. But could you imagine if, Mexican troops were in our territory. Canadian troops were in our territory. It never happened, but at the same time, I just feel like this is apples and oranges, right? I feel like this is more so like American troops going to help out Ukraine and and not even that, because this is directly impacting us. It's not even helping out Ukraine. This is actually directly impacting us, and it's a fight that I think we should take on. And I don't think we should put I don't want to put troops on the ground, but I do think we need to be using our military's technology, drones, whatever it takes to get rid of this shit, man. And I know what people are gonna say. People are gonna say it'll never go away. It'll just be born somewhere else. Maybe, but I'm Colombian. And I can tell you that the Colombian cartel has not been nowhere near what it used to be. Part of it is because they just moved over to Mexico, right? But the Mexican cartel was still around when the Colombian cartel was running things. So I don't know. I think with technology, 2025, drones, AI, there's a lot more things that we can do than in the past to slow all this shit down.
News Nation's Mills Hayes tracking the divide between these two presidents across the southern border. Mills.
Hi, Natasha. Well, drug trafficking, it is a decades-long blame game between both the sides of the southern border. The U.S. arguing that Mexico allows substances like fentanyl from cartels to get through to the states, but Mexico claims that the U.S. is also at fault for fueling exchanges with guns and cash coming from the American side. And now, President Trump's latest proposal to tackle the problem, not sitting well with Mexico. At the height of the drug crisis in 2023, 111,000 Americans were dying due to overdoses per year.
When you take certain drugs, the drugs, fentanyl, et cetera, it destroys your skin, it destroys your teeth, it destroys your brain, it destroys everything.
CDC data shows overdose deaths have declined by about 28% since then, to about 80,000 deaths per year. But for President Trump, it's not enough. He wants President Claudia Sheinbaum of Mexico to allow American troops to address the cartels sent across the border into her country. The territory.
I'm telling you, the first month Trump was in office was gangster. He was just executive order, executive order, executive order, executive order.
The territory cannot be violated. Sovereignty cannot be sold. Sovereignty is cherished and defended.
What does it have to do with sovereignty? But this is kind of Trump's fault, for saying shit like, we want to take the Panama Canal back, we want to take over Canada's the 51st state. The whole sovereignty talk was blown up, from the media and stuff. So it's definitely at the fault of Trump and the media. And this is propaganda, bro. What is our military helping you with? Someone that's killing your mayors, pastors, and priests. I thought the church was off hands. Someone who is a group that's not just terrorizing your country, but ours as well. What does that have to do with sovereignty if, as allies, our military comes in and helps? Because without a doubt, your military is nowhere near as capable as ours. What does this have to do with your sovereignty? And then you got the Mexican people, yeah, Mexican pride, but it has nothing to do with pride. It has everything to do with solving this shit.
Sheinbaum has already allowed the U.S. to ramp up drone flights over Mexico in search of cartel fentanyl.
Okay, so this is actually what I was saying. Sheinbaum has allowed drone technology, that type of things, because I don't know if I really want troops out there losing their lives because of this. But if we can get the job done with technology and their troops on the ground, perfect. I just don't like this idea that it has anything to do with sovereignty.
Labs, but is drawing a line at boots on the ground. Mexico in search of Sheinbaum has already allowed the U.S. to ramp up drone flights over Mexico in search of cartel fentanyl labs, but is drawing a line at boots on the ground.
We can collaborate, we can work together, but you on your territory, we on ours. We can share information, but we will never accept the presence of the U.S. Army in our territory.
This rejection coming after serious allegations from President Trump's nominee to lead the drug enforcement.
I got to find out why she wouldn't want that. Maybe I'm wrong.
Administration claiming cartels control the Mexican government.
What percentage of the country of Mexico would you say is dominantly governed by cartels?
Well, I would say a majority. I left DEA in 2019.
Listen, I got to tell y'all this. So when you get to a certain level at a bank where you have a certain amount of cash flow coming in, you'll get assigned a private banker. And a lot of these private bankers will help you not just with investing, with getting capital, with partnering with the banks on certain projects, whether that's you're trying to get a loan for a warehouse, you're trying to get funding for your next big project, you're trying to scale and open more locations. But let's say you want to buy a factory. These bankers will go broker the deal for you, help you out. And one of my bankers, he told me about a story of a client that wanted to buy a factory in Mexico. And when at the meeting, he'll never forget it. At the meeting, he went into an office and there were three groups. There was the local police, there was the local bank, and right next to them was the cartel. All three of them were in the room because they all are part of governing that area. And the cartel wants their piece, and the government, local government there wants their piece, and the banks want their piece. And that's how they broker the deal. So when this guy says the majority of Mexico is governed by cartel, bro, immediately I thought about that story. Let's hear it again.
DEA in 2019. From
Mexico, would you say
Control the Mexican government.
what percentage of the country of Mexico would you say is dominantly governed by cartels?
Well, I would say a majority. I left DEA in 2019 from Mexico City and saw the dominance that the cartels had at that time. CJNG controlled 24 of the states in Mexico.
White House National Security Council spokesman James Hewitt said late Saturday, quote, the president has been crystal clear that Mexico must do more to combat these gangs and cartels, and the U.S. stands ready to assist and expand close cooperation between our two countries, end quote. Now, the administration says that President Trump is closely working with Mexico's president to achieve the most secure southwest border in history, Natasha.
Okay, Mills Hayes with that live report tonight. Thank you.
Thank you for watching. Subscribe below and download our News Nation app right now on your phone, and you will get fact-based, unbiased news for all.
Crazy, man. Crazy. And so I just asked ChatGPT for, to do some research here and share why the president doesn't want America's troops to have boots on the ground. And it's reporting everything that we already know. Overall, it's just saying the disagreement underscores the complexities of the U.S.-Mexico relations, particularly concerning national sovereignty and collaborative efforts to address transnational crime. I just don't understand it. Maybe somebody in the comments can help me understand it. Other than the truth is, the Mexican government is the cartel. Because a lot of people are claiming that. We just heard it on there. 80% of the government, they say, is controlled by the cartel. They literally work with the cartel, as did in Colombia. I don't know if you guys remember, Pablo Escobar was running to be a congressman or something like that. He got to build his own prison that he would have to stay in. Like, it was ridiculous. But that's how much power these people have. That's how much power these people have. All right, guys, and the next thing I want to take a look at here is let's get into stocks, man. Let's get into stocks. We're going to go real basic because I know a lot of you guys, some of you got a lot of people. Let me see how many people actually invest in the market. How many Americans invest in the stock market? Because I know crypto is a lot less than I thought. Like a lot less. I thought, let me see, how many people invest in crypto. Yeah, facts. Facts, Rich. So look, as far as crypto, what percentage of the global population would you guys say owns crypto? Of the global population. Bro, it's only 8%. Only 8% of the global population owns crypto. Okay. Now, with stocks, it's reported that 62% of adults have money invested in the stock market, but that's because of 401ks. It's not like people are opening brokerage accounts and managing their own funds. Let me do research on that. Let's see. Okay, and the answer to that is 33% of households have a brokerage account and manage their own portfolio. 33% have a taxable investment account. Everybody else has money in the stock market because of their 401ks, their IRAs, et cetera, et cetera. Okay, so, I'm going to assume most of you guys have no idea how the stock market works, even if you do have money invested in there. Okay, let's check it. So let's watch this very basic video to get started with this series, because I love the stock market.
Investing in the stock market can seem like a crazy prospect for a generation of young adults that have 2 cents in their pocket and a $100,000 student loan for a degree that they don't use. But when it's done right, you can take that 2 cents, turn it into 3 cents, and well, that's more than you had yesterday. And isn't that the goal? In all seriousness, the stock market is often perceived as a big scary abyss of money that eats unsuspecting investors alive and is the path to a magnitude of wealth for those that understand it. While those perceptions can be true, understanding the stock market and succeeding in making money with it is far easier than you might expect. In order to understand the stock market, first, we need to understand just what a stock is. A stock, otherwise known as a share, is a financial token or instrument that signifies ownership of a company in some proportion. Basically, if Amazon had 1,000 shares and you bought 1 share, you would own 1/1000th of Amazon. In reality, Amazon and companies alike have millions of shares, but that sums up the point. When you own a stock, that means that you own a portion of that company, and as the value of that company increases, so does your stock price. There are also common and preferred stocks, which refer to the voting rights of a shareholder. Common shares have voting rights, and preferred shares don't. When you have voting rights, you can vote on things like board elections, mergers, and other financial decisions. Preferred shares, however, are called that because they get preference when a company pays a dividend, which is basically a split of the profit of a company with the shareholder, and they also get preference in other financial situations. Stocks can get much more complicated than that, but these simple understandings will serve enough to the basic investor. The next thing you might be wondering is why exactly companies will sell stocks. And that answer is simple: to get money. Stocks allow a company to raise massive amounts of operating capital with essentially no extra effort or product. The modern stock market often bases the value of a company off its potential earnings down the line. This means that relatively small companies can earn millions, or even billions, if investors think that they can succeed in the future. So then, if a company wants to sell their shares, they need a place to do it. Enter the stock market. Companies list shares by selling them through an initial public offering, or IPO, on an exchange. This essentially changes the status of a company from a privately held business to a publicly traded one. IPOs can let company founders cash out their stake or just let the company raise money. Once a company's stocks are listed on an exchange, the public can trade them. Usually prices will fluctuate.
Money is debt. Rich.
Based off of public opinion, but the more concrete trends and fluctuations are usually dependent upon a company's earnings and operations. These can be measured by PE ratios, or price to earnings ratios, as well as a variety of other metrics. This is usually where casual investors get scared and their eyes start to glaze over. But fear not, it's not as complicated as it sounds. Next, we need to understand how and why a share price fluctuates. The stock market is composed of millions of investors and individual traders who all feel different ways about a company. They all make independent choices, and the net of those choices result in the positive or negative movement of a stock. If more people buy, then the price has to climb. If everyone wants out of a company, then the price falls due to lack in purchasing demand. An example might be this. Say you post something on Craigslist for $100. After posting, you get 100 emails saying they'll come to purchase your item all cash right now. Most people at this point might start thinking that they priced their item too low and thus raise the price until, in theory, it reaches the most that the one single last buyer will pay for it. Conversely, if you receive no offers, you'll likely keep dropping the price until someone bites. This is similar to how the stock market moves, except that the price rise and drop isn't done consciously, rather by millions of transactions every second, supply and demand, which brings us to that topic. For every stock purchase or sale, there has to be a buyer and a seller. If there are more buyers, then the price will go up. If there are more sellers, the price will go down. Traders often might talk about the bid-ask spread, which basically means the difference between the bid, or what someone is willing to pay to buy a share, and the ask, or what someone is willing to sell a share for. Supply and demand is fairly simple to understand at the end of the day. If more people want something, that thing, in this case a stock, will be more expensive.
Now, what drives
at
that?
the start of stock?
Okay. There's a few things that drive that, and this is something I had to learn a lot of times, right? In 2025, it's no longer just news, right? It's no longer just financials, right? Like profits. Now it's also social media / trends. Okay. What's trending? Because wherever the demand is, that's what's going up. But in the long term, what drives demand is going to be financials. And that's what value investors believe. And that's what Warren Buffett is, a value investor, okay? He thinks that if you can find a great company that is undervalued because nobody's paying attention to it, then you can start buying it up. And then when it does get the attention it deserves from the news, from social media, from earnings reports, then you can ride that wave up. That's what he believes. That's what he did with Geico. That's what he did with Coca-Cola. So it's not just, there are people, right, that will invest in something that is a great company and will lose their asses off, or that will invest in something here and it takes 10 years for it to finally pop. Because even though it was a great company and it made money and it was profitable and it was undervalued for 10 years, nobody even knew it and it didn't pop or nobody cared because it was a boring company until year 10, and then it skyrockets. And then people got out right here or got out right here. You know what I mean? So you don't want to be the person that holds onto a stock for 8 years, get out because, damn, it's been 8 years and nothing. This whole time I could have been in Amazon. I could have been in Palantir. I could have been in Tesla, in NVIDIA, right? This whole time, there's an opportunity cost. So it's not just about whether or not it's a great company. Is there volatility? Is there liquidity? Is there volume in that stock, right? Are people paying attention to it on social media? Does the news even talk about it? Does the CEO, is he a good salesman? All of that stuff matters. It's no longer just, is it a great company? And I don't think it ever was entirely, but that's why understanding supply and demand is so important. Let's continue.
Stock markets, matching buyers to sellers was done manually on a trading floor. Now it's mostly done automatically by trading systems. This allows the market to move much faster and creates the breakneck pace that any casual onlooker notices when watching the stock market. Now, you might be wondering, well, I don't have time to understand this, and why should I even invest anyway when I can earn 2 to 3% just keeping it in a bank on a high side? Well, the answer is pretty simple. If you do it right, you can make a lot of money. Using a common example that you might have heard, if you bought $1,000 of Amazon stock back in 1997, you'd have roughly $1.5 million today. Now, that's a long investment timeline, but I think most people would agree that the purchase would be worth it.
That's if you stayed in it for that long, right? Because some people would have got out when it hit. If let's say you put 1,000 in, you probably would have got out if it hit 10,000. Because most people start investing when they're not ready to. This is why I was telling you guys earlier, it's important to do this, to check these boxes. You know, start here. Focus on the main thing. Make as much money as possible doing the main thing so you're not desperate for money. So you're not reliant on your stocks. You're not reliant on your real estate. You're not reliant on your crypto. Because people who are reliant, they make desperate decisions and they never see wealth because they're not willing to delay gratification and hold on long term. This is why it's important to have a strong foundation before you get into investing. Or just make sure you have a long-term hat on.
Then you'd have roughly $1.5 million today. Now, that's a long investment timeline, but I think most people would agree that the purchase would be worth it. Other companies often provide return rates like 30 to 70% each year, which is still going to build you a lot of wealth compared to that 2 to 3% each year kept in a bank account. In essence, as long as you're able to make more than 3% in the stock market, you're doing better with your money than just keeping it in the bank.
Hotep. I'm gonna write that down, Rich.
Now that we understand the stock market to be a real-time marketplace where you can purchase a part of companies you think will succeed, the next step is to figure out how. The first thing you'll need is a trading account. You can start one with common providers like E-Trade or other major banking institutions, but you can also use...
I don't think TD Ameritrade is around anymore. I think they got bought by Fidelity. I mean, by Charles Schwab, I think it was. I like Fidelity. This is who I use right here, Fidelity. But Fidelity, Charles Schwab, E-Trade, all great. Another really good one, you know, depending depending on what you're looking for, are kind of like the fintech ones like Robinhood, Webull, M1. But if you really want a robust trading platform or brokerage account, I highly recommend Fidelity or Charles Schwab. There's for a few reasons. Better margins, from my understanding, better margins, and just access to more securities. So let's continue with this video.
Use free trading services like Robinhood. Common trading services will charge fees for every trade you make, but new tech companies like Robinhood have made everything completely free. That means you can invest all of your money in a company and not worry about paying fees to the brokerage.
Most of the brokerages
We have a
do
link
that
below
now.
to start a Robinhood account where you can get a free stock to download that if you'd like. Once you have an account in any trading service, you have to decide what companies or multiple companies' stock to purchase, which is arguably the hard part. You also have to have a certain amount of money. Stocks range from a few cents to many thousands of dollars. The key thing about stocks is that you can't purchase part of one. It's either all or nothing. If you want to invest...
Oh, this has to be an old video. How old is this? 5 years ago. So every single brokerage pretty much allows you to do what's called fractional shares. So you don't have to buy a full stock anymore. This is why I tell younger people, sure, real estate was cheaper back then, but it was a lot harder when I was younger to invest into the stock market. Because when I had to invest in the stock market, most of these brokerages like Fidelity, like this one, you had to have a minimum of $10,000 to open an account. And then every trade cost $9, $7. And then you had to buy a full share or nothing. So if you wanted, for example, to buy the QQQ, the NASDAQ index, you had to spend the $500 per share. Where now you can buy $10 of the NASDAQ. You could buy $10 of Tesla, whatever you can afford, and it gives you a fractional share. And you don't need a minimum to open an account, and there's no fees. Like there's so many ands, and getting margin, getting loans on your stocks are like so easy because it's evolved so much. So take advantage, man, that you guys have access to something so amazing.
To
like
invest
this.
in Amazon, you'll need at least $1,800, at least at the time
See?
of recording, to get started. But you can buy much cheaper, well-rated companies for a few bucks. Before you make a purchase, you want to do extensive research to make sure you understand what a company does to make money, whether they're in good financial standings, and also see what experts think about a company and whether you should buy it.
Yeah. So that's the stock market. That's a little tip at the end there for you. And so let's actually look at what makes a great company. Okay. What company y'all want to look at? I gotta change this. There we go. That looks better. What company should we look at, guys? NVIDIA. Here's trending, MicroStrategy, Palantir, HIMS, SoFi, Robinhood, Tesla, Coinbase, Apple, GameStop. All right. David said Palantir. All right, let's look at Palantir. So Palantir is trading for $127. Now, this website is called Qualtrim. It's by a YouTuber that I really like. He made this software, and it's freaking amazing. Okay. So Palantir Technology shares are trading lower. The company reported Q1 financial results. So the stock is lower than it was before. I don't know what that looks like. We'd have to look at the 52-week average. But if we scroll down here, this is what I'm looking for. I am looking for growth. I mean, the price is up. I don't know what they're talking about because had you bought a month ago, it was $74 a share. Look what it's at now. And I was telling you guys on my freaking live streams last month to double down. To double down. Stocks are cheap as shit, and it's got nothing to do with the company. So if you would have bought when I told y'all to, doubling down on these stocks, boop, I think this month I made like 15 grand just from buying the dip and it going back up. Look, it's right back to where it was. It's literally right back to where it was. All right. So anyways, think about it. If the stock price is here and then you look over here and you see, damn, revenues have been growing consistently every single year. Okay. The US customer count has been growing every single year. All commercial customers, and they're growing. Okay. That's a good sign. EBITDA, it's a profitable company 2 years in a row. More than likely, it's going to be profitable next year as well. Free cash flow, it's been growing every single year. There's a difference between EBITDA, earnings before interest, what's the T? Taxes, depreciation, and appreciation or amortization. I can't remember. But that's what EBITDA is. After EBITDA, you could literally between taxes and everything else and interest rates, interest that you got to pay and all that, you could have nothing left over. Free cash flow tells you what's left over after EBITDA. Okay. And so net income does that. I don't fucking know. But free cash flow is pretty much the cash that they have that they can invest, that they can put back into the business. And so what a company typically does with free cash flow is that they do a few things. If a company has nowhere to put into their company to get a return on capital, and then they'll do other things with the free cash flow. But typically, they're going to put this money into research and development, into more locations, if it's like a restaurant or a hotel, things like that, to grow the business even more. But if they've run out of things to put this money into, they're going to either buy back stocks because they believe the company is going to continue to grow in revenues, or they don't think the company is going to be growing much, and they're going to pay the shareholders a dividend. That's what usually happens with this free cash flow. If you're looking for a company that's going to grow, you don't want them spending all their money on dividends. But if you just want something stable because you're retired, then you're good with dividends, right? So far, all of this is a great sign of a great company. Earnings per share. Let's look at cash and debt. Obviously, we don't want a company that has a bunch of debt that we have no clue how they're going to pay back. But if you look at Palantir, they have $195 million in debt, but they have $5 billion with a B in cash sitting in the bank. And they also get, let's say it stays the same next year. They also make $1 billion in free cash flow. So this debt, they can easily wipe out. Debt is not an issue here. You can see they get a crazy amount of return on capital, and they're purchasing stocks back, okay? They have more shares outstanding every year, which isn't great. What you want to see is the opposite. But this is also a company that's growing like crazy. And with everything going from not being profitable to profitable, I can see shares outstanding either stabilizing or declining, which is a good thing, okay? Valuation, it's not cheap anymore. If the valuation was down here, man, I'd be buying the shit out of this stock. Now, if you think it's going to continue to grow, let's say right now the company's worth $292 billion. This could be $1 trillion business. If they grow by 100% or 30% or 40%, if they grow by 20% every year, this could become $1 trillion business in the next few years. So it might still be worth it at this point, and you believe in this company so much, you're just going to dollar cost average. When it dips, you buy some. When it increases, you buy some. When it dips, you buy some. All that good stuff. You can look at the expenses. Look, most of their expenses is from research and development. It looks like very little is from CapEx, which is good. And very little is from OpEx. They don't have crazy expenses compared to how much income they're generating. And then you can come here and learn more about the company. But one of the things you want to do is you want to learn about who their CEO is, which I love the CEO of Palantir. I think he's an amazing human being. You want to see that their employment is growing or stabilized, because if they're growing in employees, that means the company is growing as long as revenues and profits are growing, right? And then you want to see insider trading. Are they buying back stock? Are the the executives in this company buying back stock? If you see stuff like this, like small amounts that they're selling, usually that's fine because, you have stock options, stuff like that. And then you can look at the news. But the last thing that I typically will do after looking at the financials, and this is healthy, right? You want to look at it from a quarterly level and look every quarter. It's still going up. Because look, it could look great annually, but when you switch to quarterly, it starts dipping. What do you think is the probability that 2025 is going to be a down year, right? So that's why you want to look at it quarterly as well. And guys, it's growing every quarter. Free cash flow is growing every quarter. Man, this stock is crushing it. It's an amazing stock, right? If you truly believe in this business, you might want to have some exposure into its growth, okay? And so aside from this, one of the last things that I do is I like to look at the earnings calls, okay? On the same thing, you can go to transcripts, and we can go to Palantir or search Palantir, and you can see AI generates a summary of their last earning call. So you can see what the future outlook looks like, the business's highlights, the financial reports, the CEO's comments, and the highlights. And you could even listen to the actual earnings call like it's a podcast, right? But I like to look at this before I listen to it, just to see if I can build some more conviction in the stock, okay? So that's how you find out whether a company is good or not. Like, would you want, if it was your business, would you run it? And this is why I tell barbers in my mentorship, for example, hey guys, if you run your business like a real business, it scales. When you start investing, when you start buying other businesses, stuff like that, all that information, being able to read financials is important. Good point. Let me see. David said, can we go over what not to look at in terms of buying companies? Some red flags? Yeah, of course. Let's see if I can find a bad company. I don't know if let's see. Banks are usually not the best to buy. Let's check. No, Merck is probably going to be okay. Yeah, let's check Macy's. Uh-oh. What's Macy's stock ticker? That's the only thing about this website I wish was better is stock tickers. What's this? Is this no. Yeah, you guys want to look at Bud? Anheuser-Busch? Let's look at this, okay? And a lot of times it's not even about bad companies. It's about opportunity cost. If I put my money in this, then I can't put my money in this. So it's like you shouldn't be, like Warren Buffett says all the time, there is a phase, there's a stage in your investing. And I was telling my mentorship group this the other day. There's a growth stage. You are not Warren Buffett. Warren Buffett does not buy growth companies anymore. He's got too much money. He has way too much money. His money has to be spread out across 50 different companies, or he can manipulate the markets, okay? At a certain size, when you're a certain size, you have to report everything to regulators. Every move you're going to make and all of that, because you're too powerful. You move the markets. When you're smaller, you can look for higher growth rates, all right? You can find better opportunities, and you can be picky. You can be pickier. The bigger you get, the less picky you can be, all right? And so essentially, in the beginning, you are looking for great companies to grow in, companies that are going to get you better returns, not necessarily the safest. So you're willing to take more risk, okay? But a company like Anheuser-Busch, that might be the company for some people. But first, let's look at their revenues. The revenues ain't bad. It's stable, and actually, it's been growing a little bit. This is a very old company with a strong moat. They have a huge market share, and their price has consistently gone up. They're a profitable company. They have free cash flow. You don't see growth here, but you see stable. And so a company like this, you don't buy right now, okay? Let's see how much debt is here. Where's the debt? Where's the debt? There it is. So $69 billion in debt, but they do $12 billion in free cash flow. So they can pay this debt off. Between their debt and how much cash do they have? Between their debt and their cash, they can pay this off in 4 or 5 years. Not the best situation to be in, but they also pay dividends. Their dividends have been coming down. It's not the best company to buy, but if this company's price was undervalued and instead of $66, it was trading at $40, it's probably a good buy, right? Doesn't mean there isn't better opportunities out there, but it could be a better buy. And look, employees are falling. There's no growth here. So for somebody like you, David, who's in their growth phase, there's zero chance that I'm buying stock ticker Bud, which is Budweiser, Bud Light, right? Plus, a lot of this started happening when they were doing those campaigns, and what was it? The CMO of this company said they didn't want frat boys anymore. They wanted they were going away from the customer base that literally made the company what it is, and they were going to start targeting, the LGBTQ community. They destroyed the company. They destroyed the company. So they didn't destroy it, but obviously revenues have jumped back up. But they had a dip in 2020 for sure. If you look at this, look at the dip right here, and I'm pretty sure that's from that campaign that they did. It really hurt the business, and forecast isn't pretty. So I don't know, right? And again, there's a lot of opportunities. There's always opportunities if you know your shit. So if you know manufacturing, man, look up manufacturing companies. If you know a shit ton about AI, look up AI. If you love sneakers, look up sneaker companies. If you're in the cosmetics and beauty industry, look up cosmetics and beauty. Ulta, let's see if Ulta's a great company to buy. And if it's on sale. Look at this. Ulta's a great company. Their stores are growing. Every single year they're growing. Okay? Their revenues are growing. The price isn't that high compared to the last year to date, right? It's profitable. The free cash flow isn't growing, but just because free cash flow isn't growing doesn't mean it's a bad thing. It might be that they're investing in growth, because look, they're buying back shares, and they have a good return on invested capital, and their earnings per share has been growing, and right. So you can see they definitely reinvest money into the company. And the valuation is not at its peak. It's at a 15 PE ratio, price to earnings. The way you measure PE is I try to find an index that covers either this industry or the S&P 500. And the S&P 500, if you look at the PE ratio, oh, you're not going to show it to me? That's how you feel? The S&P 500 PE ratio, let's see, is 27.99. 27.99. So technically, if you think Ulta is comparable to the companies that are in the S&P 500, it is undervalued in terms of its PE ratio, but this doesn't tell you enough story. You actually have to go, if you really want to go deep into it, you got to do a valuation. And I'll teach you guys how to do that in the future. By the way, if you're in the mentorship and you do the stock course that's in the mentorship, I teach you how to evaluate a company in there. I paid somebody money that for the last 10 years has gotten a 20% return on his stocks, and this is documented, which is Warren Buffett numbers. Not quite as long. Warren Buffett did it for like 50 years. But so this is a good company, but it depends. Is it the best investment you can make right now? Because you only have so much money to invest. I would probably rather buy NVIDIA than I'd buy this company. Not just because I believe in NVIDIA more. I think it has more growth potential because of the sector that it's in the industry that it's in. But I know who the CEO is. I know what their plans are in the future. I believe in AI and robotics and automation. And so that's why I would choose NVIDIA over this. But if I had an unlimited amount of money, I would buy Ulta. You know what I mean? That's the way I look at it. So that's how the stock market works, and that's how I look at a company's financials. And you can go way deeper than this. Don't get me wrong. You can go look at different analyst reports. You can go really deep. Go into forums, see what people think. Listen to the earnings calls. Go learn who the CEO is. And even on here, you can see, analyst estimates, right? And even with some of these websites, you might want to fact check them and look at a different source, because who knows where Qualtrim, even though I trust the person who made this software, this website, sometimes they can be pulling from a certain database that's inaccurate. So you just want to double check as well. And you can get the actual earnings reports and stuff. You can get it directly, typically from their website under, I think, investor relations. Let's go to OTA and let's see if I can find it. Yeah, so no, that's not OTA. So usually when you go to a website for that brand, so here's OTA, and you scroll all the way to the bottom, you'll see investors or investor relations, things of that nature. And you can come in here and you can download, look, current investor presentation. You can find the earnings, the 10K. You can see all of these numbers because they want you to invest in them. See that? Almost every public, I think every public company has this. Okay? Was this helpful for you guys? And I think that software Qualtrim is only like $10 a month. It's like the best software I've ever used, especially for that price point. It might not be the most robust, but for what it does, it's an unbelievable price. And you can also see when there's earnings coming, you can see them on this calendar. Let me know if that was helpful, guys. All right, guys. With that being said, man, I think I'm done streaming for today. We will pick back up tomorrow on stocks. We'll go deeper into stocks, including different strategies on finding good companies, but not just that, strategies on investing in general, how to automate it so it doesn't feel like a part-time job. So it's fun, so it's exciting. So it feels like you're watching sports, not so much, a job or boring, right? And then we'll even go into stock options and how you can make cash flow every single month from selling puts, from selling covered calls, and grow your portfolio substantially in a way that's understandable and, like I said, fun. So if that's something you guys are interested in, lock in with me tomorrow, man. I'll be live tomorrow again. I'll see you guys then. Have a good week, guys.